Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well folks, here we are. It's Friday again. We've watched 4 days in a row going up, and it's been amazing strength in the markets. Now, I've been talking about this 535 pattern. We needed a close below 3,800. We didn't come anywhere close to that. In fact, we never really saw any negative numbers. There were some negative numbers overnight that all reversed after we saw the employment claims come in better than expected, the continuing claims better than expected, earnings better than expected, and the bid was on, and the machines took over the markets for the entire session. I haven't seen a session as frustrating as this one from the standpoint of once we started to move higher, it just was grinding at these very high levels. And then at the very last few minutes of trade, we saw a big explosion, almost 10 handles on the upside. And what you were seeing then, and if you've watched my live streams, I talk about this particular moment in time quite a bit. And what happens is all the ETF mutual fund folks get an influx of cash. They're putting orders in to balance out their ETFs and mutual funds, and then they also will use the futures to counteract that in case they don't get filled in some of their stock that they're trying to get filled on. And then you see this big surge, and we saw that surge come in that last 10 minutes. It was just relentless as the markets just went straight up. And we've seen this other pattern setting up. If we go back to the week of the election, we saw 4 days in a row, market just went vertical. It actually started on Monday, so it was 5 days. And then we saw the inauguration, another 5-day surge, and now we're getting another Monday to Friday surge in prices. And this comes in after all the scuttlebutt over the short squeeze on GME and all that story was out there. All of a sudden, here we get another big surge. And it's interesting because I do think there's some dynamics that are occurring in the markets. I don't think every Robinhood trader is an amateur. I don't think that the retail market is just a whole bunch of amateurs that don't know what they're doing. In fact, this channel has brought me into understanding that the retail player has a lot of influence. And not only that, there's some super smart people. I actually applaud everybody that's been involved with this channel, with the markets in general. In a conversation I had right before the beginning of 2020, I was talking about this access to the markets that was going to be coming in after the ticket fees got taken away. Robinhood started to come in with the no ticket fees. Charles Schwab followed through. Then everybody was talking about fractional shares. And the event that has occurred after that is that the amount of volume on the exchanges has virtually quadrupled. And we even saw last Friday, we saw like a 14 billion shares trade. And so we're continuing to see this heavy volume come into the market. So there is a lot of new players coming in, and we're just seeing this thing just accelerate as we go through. And in fact, we saw the markets close at an all-time new high today by 1 point. There's several things I'm going to discuss in the technical section that still concerns me of the configuration, what's going on. We are getting potentially an RXT sell. We'll see how it goes. I'll talk about that in a minute as well. But we are seeing our database come back into play. We're seeing massive amount of buying, all kinds of things coming in. So this market is turning on a dime, and we've watched this happen multiple times. So it has to be respected. Now, like I said, I was looking for this 535 pattern. Right now we have 4 days up, an all-time new high. Doesn't mean that we're just going to follow through on this, but it does mean that the pattern has been broken, and now it's still, to me, even though we made a new high, it suggests that we're likely to see some sideways movement here, and still not convinced that we're just going to be able to scream off into the 39 handle and go a lot higher from this position. I still think there's some grinding that needs to be done, but we'll see how this all plays out. But as we come into today, basically there's about 50 or 60 earnings reports coming out, few significant. They're going to continue to be in play. Couple major thing that's coming out today is employment numbers. And I keep wondering, is the employment the fly in the ointment? Is there a surprise in the employment numbers to come out today that might reflect some sort of negativity? I don't know what's going to turn this market, but obviously no one's afraid. The buying just keeps coming. Momentum is not coming into play, which is interesting for me from this configuration point. So we're not seeing this massive breakout type scenario. But let's go ahead and take a look at the charts, see how they've set up for Friday and the end of the week. Well, folks, there's no way I could start tonight's show without showing you that GameStop is a sell in our system. I wanted to show you that when it got in at $20.17, it's now exiting on the open in the morning. So whatever that is will be the exit price for our short-term models. Now, our intermediate models are still hanging in there, but I really wanted to see exactly how this thing was going to play out, and I think it's a bit interesting. So you'd have made 165% on the trade, minus whatever the opening is, higher or lower. We'll see how that plays out. But you know, the spike, obviously anybody that owned this thing down at 20 or 40 or 50 bucks, whatever, hopefully was smart enough to sell out when it was soaring at $200 and $300 and $400, right? Hopefully that happened. But I just wanted to cover that. Let's go ahead and take a look at the short-term database in WaveTech. And as I mentioned in the opening comments, we have seen this database come screaming back. It got down to 27.2% bullish. It's back at 38.3. We saw about 1,600 new buys again last night. We did have about 250 sell signals, but we got bullish ratios on both models. So that tells us overall there's a lot of buying coming back in. And as I've told you folks in the past, this 42% bullish number is very significant. So we haven't gotten back above there. If we do get above 42% bullish, it's at 38.30, then that will suggest that we have some sustainable short-term rally that is likely to unfold. Right now, we're still seeing that quick snapback rebound, and it's interesting to say the least. And as I talk to you every Friday, we do have our intermediate models will be run on Friday after Friday's close. And what that's going to tell us is exactly what's going on with the intermediate models. Now it's up at 81% long right now. So basically from an intermediate standpoint, 8 out of 10 symbols in our database are long and participating. The portfolios on intermediate level, if you're running WaveTech on intermediate level or short term, but primarily on the intermediate, those portfolios for the most part are just screaming right now, making a lot of money. So that's exactly how it should work. Typically, we don't get a lot of sells when we're making new highs. As I've talked a lot about over the past several weeks, as a year ago, we were seeing a lot of sell signals come in at this point in time. So it was somewhat interesting from the standpoint of what was going on in the database. We'll see how this week plays out. If we stay up at these levels, I don't expect to see any material sell signals coming out of the weekly database or the intermediate trade. So let's go ahead and take a look at the technicals. As we begin looking at the S&P futures, they are up 8 handles overnight, so we're seeing some follow through from the close on Friday. We closed around the 65, 66 level on the futures, and we are seeing some follow through. They've been up to the 38.73 level. They're currently trading just off that high at 38.7225, so we are seeing a continuation of this. But what's interesting, if we look at PPM1, it still hasn't crossed over its second derivative. PPM2 is turning down and PPM3 is flat. And this is what I was referencing when I was talking in the beginning of the video, that we're not seeing momentum growth at this level. And this is somewhat concerning. We've seen plenty of moves where we moved into a high over here where I've got my cursor. We've seen that, and then it fade off for several days before we move up. I think it's potentially the same kind of pattern is setting up here, where we're setting up a little intermediate high. We'll drift back. I've talked a lot about this 5-3-5 pattern. We had 5 days down. Now we're working on potentially 5 up, but the key patterns are still the same as what I discussed in yesterday. The numbers have changed just slightly, but the 10-period moving average now is 3806. The 21-period moving average is 3806. This is on the futures now. And then the key support level is way down at 3754. Now, if we look at the market grid for today, my expectation is if we can't get through the 3878 level in the first 2 hours, then we're likely to see an R1, S1 minimum, possibility of an S2. So that sets up an R1, which would be 3878, possibility of 3836. Let's take a look at the SPX to just get a handle on that. And as we look at SPX, yesterday we traded up just about to the RTX number, 3877. The high was 3872, and we pretty much pinned this thing up. If we look at the market grid for Friday, what we're looking at is R1 is 3881, and right now, like I said, futures are up about 8 handles, so that would put us fairly close to that level. Same thing here as in the futures. If we get through 3881, then we're going to go to an R2, and then the pattern will be an R2 S1, the range expectations for Friday. But if we don't get above R1 in that first 2 hours, then we're likely to see an R1 S1 minimum. Most likely we'll see at least an S2 3852. We might be seeing some unwinds, maybe something to do with after the effect with the employment numbers coming out and those sort of things. The overall pattern continues to be really neutral in spite of the new highs. This is the interesting chart that I want to bring up, is the SPX weekly chart. 3824. As long as we close above that today, we're going to get an RXT sell signal. And let me explain again what this means. It means that we are going to see 1 to 2 weeks of sideways movement. And typically what it will do, and these numbers will be a little higher, but we'll go into like an S1, S2 number, and that would be suggesting around the 38 handle, possibly going down just below into the 37 handle. But that's when the calculation comes out, I'll cover that on Sunday night's video. But we're definitely looking at a potential RXT sell. Doesn't mean there's a major top or anything of that sort. It does suggest that we get at least 1 to 2 weeks of sideways movement, which should represent a retracement from the current levels. Now, oftentimes on RXT sell, the very beginning of the week, we'll see a new high and then a reversal. So I'll be discussing all this on Sunday night. The next market I'll cover is the NASDAQ. NASDAQ's up 55 handles, up 0.41 on the session. Same scenario, although the PPM2 is a bit stronger on this pattern, but I've talked about this for weeks now, where we're seeing the relative strength in the PPMs are a little stronger in the NASDAQ futures than they are in the S&P, and this is generally due to the large cap tech stocks that continue to drive the markets. I did notice, I won't cover tonight, but I did notice that Tesla doesn't look very good. It's sitting on some major support. There is some vulnerability there now that it's a major player in that top 10 list on the S&P. There could be some effects there. And also, Apple is doing well, but the momentum looks just like what we see here on the NASDAQ. So we're seeing a very mixed picture. We're not seeing any real acceleration. PPM1 on the NASDAQ, again, is not penetrating through its first, second derivatives in spite of a 0.5% higher, just about 0.42 right now. And on PPM2 it is, which that tells us is that the key support is at 1369. In last night's video, I talked about the potential of going to the R2 number. If we got through R1, R2 was 13,564. The high yesterday, 13,568, was almost a dead hit on R2. The grid for today is suggesting that we're looking at a R2 number, 13,664. The high so far overnight, 13,616. And what this tells us, if we don't get above that 13,664, that will also be the turnaround point. So most likely, we're going to call it an R2 S1 pattern for today. The last thing we'll look at is on the weekly chart, we also have a potential of getting an RXT sell on the NASDAQ. That would be a close above 13,521. So if we close above that on Friday's close, then we're going to have an RXT sell, which tells us there's going to be some sideways movement. Now, one of the things that I talked about a lot in the last 3 weeks is the power of the 10-period moving average in this level. We had a big reversal last week. We closed right on it. The low was 12,829. The 10-period moving average was 12,662. We saw a little bit of an open below it on Sunday night with that weakness that we saw, and then a reversal off of the 10 going all the way up to above the RXT. So we saw 12,897 as the 10-period moving average this week. 12,727 was the low, and then of course the highs 13,616 as I covered a minute ago. So we are seeing the momentum surge on an intermediate basis. I've said this over and over that this market is not anywhere near a major top. My expectation going back a couple of weeks ago is we might see some sideways, maybe some challenges of a 21-day moving average. We did get to that level, but we never got to the next level, which would be a challenge of the 40-day moving average. For the most part on these indexes, they managed to go down to around the 21, maybe even spike under it on a daily basis. The next market I'll cover is the US dollar. I covered this last night, and I was talking about a surge in prices up towards the 91.80 level. The 21-week moving average is 91.87. It starting to see it turn around. Now it has become vulnerable to a penetration from the bottom, suggesting we're likely to go into the 92 handle. And this was the effect I talked about last night, which was likely to put a lot of pressure on gold. There was indeed a lot of pressure. We're seeing some stabilization. I'll cover gold next. Penetration of 9,200 is going to set the tone to move toward 9260 plus. And I'll cover this as we go forward because we're seeing the PPMs. This is a weekly chart we're looking at. We're seeing PPMs all turning around, and this market is putting in a major bottom. Keep a lot of pressure on the metals in general, primarily gold, but this is going to keep things in check. And I think this pattern is going to become somewhat significant. It's also significant as when we look at the 10-year notes and other things that are, I'll cover that possibly on Sunday night if there's some significance in the patterns when I do my weekly review. As we review the gold market, one of the things that I talk a lot about is the RTX sells and the STX buy signals. Yesterday we closed below STX, which was 1809. We had a close of 1791, and we're seeing a rebound that we should get 1 to 2 days sideways here, pushing back on toward R1, R2 on the gold market, which would be 1841, possibility of 1847. This is the daily pattern. So we're seeing some kick up in volatility and some other things here. So as I mentioned in last night's video, there is a risk of taking out that 1771 low. We did print down to 1784, As I said, we're seeing some rebound off of those levels, and that is likely to be significant if we can get back into the 18 handle. Right now, we're trading 1791. As we look at the weekly graph, you see we went all the way down to the weekly extreme. I mentioned this also. 1807 down to 1794 could be the low. We printed through that level, traded down to 1884, and now we're trading back into the grid range. The one thing I keep pointing out here is that at least the PPM1 is actually still showing an acceleration, which means that the 10-period moving average is flattening out substantially, and that also usually will pull the market to that level. Now, the 10-day moving average is back at 1855. So this will come into play on Monday night. It would be somewhat of a risky buy down here, but if you wanted to play against the lows of yesterday, there's probably a shot at a trade to get back to somewhere between 1822 and 1845 over the next couple days. This will complete the video. Thanks again for the great week and the participation we have in the channel. I'll talk to you on Sunday night.